Now, while Fridays are not my favorite day to day trade, it's not a bad day. This one happened to be not only narrow ranging, but pretty low volume. And when you think about what preceded today's trading session, and you think about FOMC minutes on Wednesday, and then Fed Powell noon yesterday, Thursday, two major central bank hot zones are going to get the market sometimes a little pre-fatigued, most especially if Jerome Powell didn't really send the market sharply one way or the other, which it's hard to say that he did. So what we're going to do is just sort of assume it's going to be a typical Friday, and also remember that the end of a day, the end of a week, the end of a month, the end of a quarter, the end of the year, the end of something is far different than the beginning of something. I believe the beginning of something is far easier to trade. So with all that being said, let's talk about the markets that did have a breach, because if we're looking for probably the best indicator of clarity, and since we still have the predominant bullish bias in the market, we're going to focus on the long side only. So if something breaches to the downside, unless it's a V-score low, I'm not going to short this market. So the breach to the upside, where the market breaks the 30-minute high, like it did here, did the same thing on the NASDAQ, unless it does something like that, I'm really not all that interested. And it's going to take a lot for me to be interested anyway. The S&P breached to the upside, the Nas breached to the upside, and that was it. The Dow breached lower, and the Russell did not breach at all. So what do we do once a breach happens? Well, this is about as straightforward a trade as it gets. Now, this was a very narrow range, and if you watched yesterday's video, you know how we accommodate this, and this would have been relatively easy, a very similar accommodation where we look at the HPMR, and then we're going to actually put our stop loss about 3 points below, actually almost 4 below the low, because we need to accommodate for about 12 points on the S&P. Well, nonetheless, we've got a zone once the market breaches that starts us at about this area, but can extend all the way down to the clearing range low, and then even a little bit below that because of the narrow range. But nonetheless, gang, this is a buy and nothing but a buy, right? We keep that bullish bias, we pay attention, and we respect the breach, and then we play the retreat. Pretty simple. Well, let's talk about one other thing. We discussed this yesterday too in the video, which is having a read on the S&P is best after we have a read on the Nas. Now the Nas kind of felt like it was in runaway mode. And a lot of times traders will, after the breach, feel like, well, if I can't get long and it looks like the Nas is running away, well, let's short it, right? We don't want to do that. The breach tells us it's long and long only, as does the bullish directional bias. So we have to be patient. And again, we have a really narrow range. So we know the lower lows can extend far lower than what we saw. And we know the lower lows really should be, in this case, down to the HPMR and factoring in the typical price movement range for 9 to 10 a.m. Eastern. All right. So again, the breach means long and long only. The fib zone tells us where we can start thinking about it. The clearing range low is still a valid level. And then we have the HPMRs below that. But here's the thing. Where do you want to buy? You want to buy after a move lower. Now, the more shallow this retracement, well, the smaller your position size needs to be. But nonetheless, this was a buy, because if you extend this zone out, this is still a buy. So either you're doing nothing because you don't like how shallow the retracement was, or you're still looking to the long side. That's it. And if you stuck with that, you did fine. Don't get impatient. Don't get twitchy. Don't start calling tops. Once the breach happens, wait for the pullback. Buy QQQ calls if you need to. Look at relative outperforming tech stocks. Look at relative outperforming tech sectors. And we'll talk about the sectors some more in the premium video, but focus on those, focus on the long side, and this was actually a pretty good trading morning.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me